Welcome to HashSpeaks Finance. Today we're looking at Rick Rule's take on the future of Canadian oil and gas and why he thinks it's poised for an incredible run. Rule, a legendary resource investor, believes Canadian oil and gas is set for a major upswing, with the potential for some serious returns. He completely dismisses this idea that there's no business case for Canadian natural gas. He attributes the negative sentiment around it more to political factors than actual market realities. And get this. Rule argues that Canada has this awesome competitive advantage in the energy sector. They've got a skilled workforce, cutting-edge technology, and solid infrastructure. So what's holding them back? Well, according to Rule, the main roadblock for Canadian oil and gas has been political, specifically opposition from Prime Minister Trudeau. But with a potential change in leadership on the horizon, Rule sees a massive opportunity emerging. Now, I know what you might be thinking. Isn't the world moving away from fossil fuels? But Rule believes that global demand for oil and gas is going to keep rising, with peak demand happening much later than a lot of analysts are predicting. He points to the potential for geopolitical instability, especially in the Middle East, as a factor that could really push oil prices higher. And this is where it gets interesting. Many analysts believe the U.S. can easily replace Canadian oil and gas, but Rule challenges that idea. He highlights how dependent U.S. refineries are on the heavy, sour crude that comes from Alberta. He also downplays concerns about tariffs, emphasizing how competitive Canada is in North American markets. So where does this all lead us? Well, Rule recommends building a portfolio of Canadian oil and gas producers, focusing on companies with strong management, proven track records, and the ability to really take advantage of this anticipated surge in demand. He even throws out some specific names to consider, like ARC Resources, Tourmaline Oil Corp, and Peyto Exploration and Development. He likes ARC because he says they're the best managed energy company in Canada, known for being disciplined and having a real competitive advantage. He sees the potential for ARC to double in value in just 3 years. With Tourmaline, he highlights their track record of going out there and acquiring and developing assets. They're set to capitalize on the rising demand for natural gas, especially in Asian markets. And then there's Peyto, a high-quality natural gas producer positioned to benefit from easing transportation bottlenecks, and a growing demand for Canadian gas. We're talking North American and European markets. Rule also mentions a couple of larger, more established companies, Canadian Natural Resources and Suncor. He suggests these might be good options for investors looking for a more one-size-fits-all approach. But here's the really exciting part. Rule is convinced that the market is undervaluing oil and gas companies. He thinks they're basing their valuations on flawed assumptions about when peak oil demand will happen. His argument is that as the market wakes up and realizes that the demand for hydrocarbons is going to stick around for a while, the whole sector is going to appreciate significantly. And he thinks Canadian oil and gas could actually outperform because of the potential for reduced political headwinds and better access to U.S. markets. Now, this is where Rule's analysis gets really thought-provoking. He brings up this idea about the risk of peace. I know that sounds strange,
but he explains that one of the big appeals of Canadian oil and gas is that it's seen globally as a low-risk investment. And part of the reason oil and gas investments, in general, are becoming more strategic is because of the potential for conflict, like a wider war in the Middle East, or a continuation of the war between Russia and Ukraine. If those situations were to cool down, if peace were to break out, it would actually be the biggest risk to his thesis. So you might be wondering, what about ETFs? Rule prefers picking individual stocks, but he acknowledges that ETFs can be a good way to gain exposure to the gold and silver markets, especially if you're not interested in doing the research to pick individual companies. He believes that both gold and silver will perform very well in the coming decade, so either approach could potentially lead to solid returns. However, he cautions that picking your own stocks, though more work, can lead to a more tailored and potentially more profitable portfolio. He prefers to have more control and not pay fees for stocks he wouldn't buy himself. Speaking of picking stocks, Rule is really high on ARC Resources. He considers them the best-run independent oil company in Canada,
and maybe even one of the best in the world. He believes they have the potential to double in value within the next 3 years. And he doesn't think that's a stretch at all. He emphasizes that the Canadian oil and gas sector is going to be hot, and the negativity surrounding it will likely turn into enthusiasm as the industry's success becomes more apparent. He believes that as the market recognizes the long-term demand for hydrocarbons, the sector as a whole will see significant appreciation. But here's where Rule's analysis gets really interesting. He suggests that the current market undervalues oil and gas companies because it's operating under the mistaken belief that peak oil demand will occur around 2030 or 2032. He, however, predicts peak demand won't hit until much later, around 2065. This means, according to Rule, that the market is essentially assigning no value to the cash flows oil companies will generate after 2032, which is a huge miscalculation. He believes that as the market catches on to this reality and realizes the demand for hydrocarbons will continue for another 35 to 40 years, the entire sector will see substantial growth. He's particularly bullish on Canada, arguing that it's positioned for even greater growth than the rest of the sector. Why? Because he believes that the political climate in Canada is shifting in favor of oil and gas, which will reduce headwinds and open up better access to U.S. markets. Now let's dive into another company that Rule is excited about, Tourmaline Oil Corp. He calls Tourmaline an extraordinarily well-run company. And he's not just throwing around compliments. He points to their impressive track record of success, specifically highlighting their recycle ratio and return on capital employed. Now, you might not be familiar with those terms, but they're key metrics in the energy industry. The recycle ratio shows how much new oil and gas a company can discover based on the profits they've earned from their existing resources. Think of it like this. It reflects their efficiency in reinvesting profits to find more oil and gas. Return on capital employed is another important indicator. It tells us how effectively a company uses its capital to generate profits. And here's another thing that sets Tourmaline apart: their ability to fund new projects and sustain capital investments. While many companies in the industry struggle to maintain their existing operations, Tourmaline can do that while simultaneously investing in new projects and returning value to shareholders through dividends. That's a pretty big deal. Rule believes that Tourmaline's success can be attributed to their corporate culture and the talent they attract. They have a reputation for attracting some of the best engineers and geologists in the industry, which, according to Rule, creates a virtuous cycle where top talent attracts more top talent. He doesn't see Tourmaline as a conservative pick. Instead, he views it as an investment in a company with a set of assets and a corporate culture that practically guarantees they'll outperform most of their competitors for at least the next 5 years. That's a bold statement. But coming from Rick Rule, it carries a lot of weight. So what's in store for Tourmaline? Rule believes that if the Canadian oil and gas sector remains undervalued, they'll likely continue acquiring assets at a faster rate than they can develop them. They're essentially opportunistic, aiming to maximize shareholder returns, and Rule believes in their ability to do so. He highlights that even with current Alberta gas prices, they're already profitable. However, he anticipates prices will rise even further, particularly with the easing of federal restrictions and the new infrastructure in place to transport gas from the Western Sedimentary Basin to the Pacific Coast, where it can be liquefied and shipped to Asian markets. This means the excess gas supply in Alberta that couldn't be sold before will decrease, benefiting high-quality natural gas producers. And guess who Rule thinks is the highest quality pure-play gas producer in Canada? You guessed it, Tourmaline. But wait, there's more. Rule also brings up an interesting point about the potential impact of U.S. politics on Canadian natural gas. He suggests that regardless of who's in office, the existing infrastructure will allow Canadian gas to flow into U.S. markets, and from there potentially even reach European markets. This means that even if Canada faces challenges getting its gas to its own east coast to be liquefied and shipped to Europe, it can still access those European markets through the U.S. That's a pretty significant advantage, wouldn't you say? Now let's shift gears and talk about Peyto Exploration and Development. Another company Rule believes is poised to benefit from the rising tide in the Canadian oil and gas sector. Remember we talked about the oversupply of gas in Alberta? Well, Peyto is perfectly positioned to capitalize on the easing of that glut. Why? Because they're a top-tier natural gas producer focusing on the region where that excess supply is concentrated. As that excess gas finds its way to new markets, Peyto stands to gain significantly. And here's another intriguing point Rule makes. He believes people underestimate the potential for former President Trump to remove bottlenecks in U.S. transmission lines. This could further open up access for Canadian gas to U.S. markets, and by extension, European markets. Even if Canada struggles to get its gas to its own east coast for export, this could significantly impact companies like Peyto, heavily invested in natural gas production. But there's a slight twist to Peyto's story. While their long-term prospects are looking up, Rule suggests that some of the dividends they're currently paying might be redirected towards increasing production capacity in the near future. This means that while investors might see a slight decrease in immediate returns, the company is essentially reinvesting those profits to capitalize on the anticipated boom in the market, which could lead to even greater returns down the line. It's a classic trade-off between short-term gains and long-term growth. And Rule clearly believes that, in Peyto's case, the long-term potential outweighs the short-term sacrifices. So to recap, we've covered 3 of Rick Rule's top picks in the Canadian oil and gas space. ARC Resources, Tourmaline Oil Corp., and Peyto Exploration and Development. Each company has its own unique strengths, but they all share a common thread. They're poised to benefit from the anticipated resurgence of the Canadian oil and gas sector. He thinks that this sector is poised for a resurgence, and he's putting his money where his mouth is by investing heavily in Canadian oil and gas companies. Now it's up to you to decide if you agree with his assessment, do your own research, weigh the risks and rewards, and decide if Canadian oil and gas is the right investment for you. And if you're looking for more insights and analysis on the world of finance investing, be sure to check out other videos on our channel, HashSpeaks Finance. We've got a whole library of deep dives covering a wide range of topics, and we release new videos every week. So hit that subscribe button and turn on notifications so you don't miss out. And while you're at it, give this video a like and leave a comment below letting us know what you think about Rick Rule's take on Canadian oil and gas. We love hearing from you. Thanks for watching, and until next time, happy investing.